Good morning, everyone, and welcome to the European crossover webinar. And we did see a few around last night in Asia. We did have the RBNZ, and they actually did go on and cut rates. Swing into that, although I'm sure probably many of you already know that. The Reuters poll was for them to cut a quarter basis point. Previously been 1 3/4. They did go on and cut. And we saw pretty good little movement here in the Kiwi. Go and swing that around. Obviously, a very, very big movement here in the Euro Kiwi. We did go on the post chart. We had actually rallied after we ran up here. If you looked on the daily, there was a resistance coming in right across that area, but on the rally back, it was coming up to, it already pulled back a 70-72 right here, offered a nice little short opportunity. And since we've gone in and paired back, continued to go on and pair back on this, actually, that was the bigger news. That was only just right there in the Asian session. We'll flip back into the main screen. Let's go move this out of the way. We've seen the cable continue to come down a bit, and also the euro came right in about. We had our bias chart support yesterday at 64. Looks like we missed it by about 2.5 pips or so. I mean, we came in there and certainly went and found some support there. Switch this off here. And you can see we had a pretty nice, smart little comeback right here with the Kiwi. Also, the dollar yen continued to move lower. We actually on a daily, I was looking here, have some support around 10.12, right around 10.12 here on the dollar yen. So we're going and just move into the news. And yesterday we had our resistance here on the dollar CAD at 34.72. We've gone and pulled back. We've tried to push up on the upsides when able to. So that resistance is holding overall. It was 34.74 on our bias chart. Right now we're currently what, 34. Well, 34.63. We've come as low as looks like 34.53. So let's go on and see where we stand on the news. So in the morning bid, the German data surprises to the upside. Trying to get a handle on the German economy at the moment is tricky. After yesterday's weaker than expected industrial and orders data, industrial output figures for March released this morning defied expectations of a drop to rise to 0.5%. The strongest performance were in consumer goods and construction, offering some signs of health and comfort for watchers of the wider Eurozone macro story. The IMF is due later to give a briefing on Europe's biggest economy. It's been consistently critical of Biden's policies, fiscal policies, arguing that it should either increase spending or cut taxes to boost growth and reduce its trade surplus, a message that does not go down well with ruling conservatives or their voters. That message, nonetheless, is reinforced by an interesting study by the Bertelsmann Foundation released this morning, which shows that Germany has been one of the largest beneficiaries of the European Union's single market. In the end, U.S. Secretary of State Mike Pompeo skipped the German leg of his European tour for an unannounced visit to Iraq, but he's now in London for the planned UK visit. He will hold talks with PM Theresa May and Foreign Secretary Jeremy Hunt, and is set to give a message on the special U.S.K. special relationship, a phenomenon that was always a bit elusive and has taken even more of a battering under Donald Trump. That visit comes amid rising discontent at May within our Conservative Party after its hammering last week in local elections, with the Daily Telegraph even suggesting she has until tonight to make clear whether she will step down as leader or face party rule changes to force her out. In Rome, the Italian cabinet is set to discuss the controversy surrounding the junior transport minister, Armando Siri, who is under investigation for allegedly accepting a bribe. I don't really care about that. Let's move on to the markets. Whether Washington is bluffing or not, world markets are reluctant to wait and see whether last-ditch Sino-U.S. trade talks on Thursday and Friday can avert another escalation of the tariff war that investors thought was about to end. Well, I was on Face yesterday, and I made this point here because the S&Ps had rallied, and my take was, we talked about those two different resistance levels, the 29.12 and the 29, which was essentially 29.33, and the market had then dipped down. And my take was, when you look at the S&Ps overall and where they're at, why the heck would you take on that kind of a risk, which is really a coin flip, whether the U.S. or China pulls their heads out? I mean, seriously. So henceforth, I thought that any rally back was just an opportunity for longs to lay off exposure, and certainly that's what ended up happening as we dipped down, at least to the S&Ps, all the way down to 2860 before making a decent little recovery, but sure a heck of a lot lower from the highs on the rebound on on Monday, which were around 29.33. So talking about 70 handles or so. But like I said, it didn't make any sense why you would wait for that. It would seem like an opportunity to lay off that risk. That being said, unless Chinese delegation led by Vice Premier Li Hu can convince its U.S. counterparts of a commitment to all aspects of a deal, the White House has promised tariffs on $200 billion worth of Chinese goods will rise to 25% from 10% on Friday, presumably then restarting tit-for-tat reactions. Wall Street stock index registering their biggest one-day losses of the year, and emerging market equities on course for their worst week since last week. Nerves jangled through Tuesday night and into Wednesday. Shanghai stocks lost another 1% lower, their lowest since early March, worst week of 7 months. Hong Kong, Hang Seng, and Japan's Nikkei lost more than 1% each too, with Seoul's Kospi was down 0.4. In another sign of anxiety, Wall Street's VIX volatility gauge surged to its highest early since January, bamboozling record short positions in the index and threatening a volatility storm that's been enough to drag traders and investors back from risky assets everywhere. Once again, folks, why would you be holding the S&Ps at this level when you're essentially waiting for a coin flip between Trump? Are you kidding me? I don't see where people, like I said, to me, look like for Mondays offered an opportunity for people to exit out or at least lay off a good amount of exposure when you look at where the S&Ps are in relation to where they've been, months and months, since then. But anyway, that being said, that's enough to drag traders and investors back from risky assets everywhere. Japan's yen, typically a safe haven in such squalls, strengthened to its best level since late March, with dollar yen briefly dipping below 110. The dollar was generally weaker, including against offshore Chinese yuan. Trade-related market blowout will inevitably start markets thinking about how the Fed might react. Euro-dollar rose back above 112, helped by a surprise jump in German industrial data. In March, investors also rushed to the safety of top-rated government bonds, with 10-year U.S. Treasury yields falling to the lowest since April 1st. New Zealand dollar fell overnight as the RBNZ became the first of the major developed central banks to cut interest rates in the current cycle. Emerging market Turkey continued its weakening on political jitters. Let's see, and we're going to move on to the FX story. Yen at a 6-week high before the China-US talks. Japanese yen rallied to a 6-week high against the dollar on Wednesday. It grows concerns about the trade war between China and the U.S. prompting investors to take shelter in perceived safe haven assets. Data out earlier showed Chinese trade surplus with the U.S., a major irritant for Washington, expanded to $21.01 billion in April from a month ago, a factor that might provoke a hardening stance from U.S. officials. The threat of further escalation in the tariff war becomes real again at the moment, as it's just impossible to assign any possible probability in any scenario, positive or negative, says Societe Generale Strategist in a daily note. Focuses on trade talks on Thursday and Friday in Washington, where Chinese President Liu will try to salvage a deal that avoid a sharp increase in tariffs on Chinese goods. Prospects of an escalation rather than a resolution of the spat between U.S. and China has seen the yen gain in recent days. The New Zealand dollar was the other notable loser overnight after the central bank cut benchmark rates to 0.5%. The Kiwi was last off 1/10. Elsewhere, the euro was up 1/10 at 12.13, but holding with recent ranges. The ECB is likely to keep a close eye on the renewed escalation trade war. So with that, we'll go on and begin the analysis. And looking at the euro, and before we get to that, let's go in and take a look at what the day ahead. Well, you can see here in the industrial output, they're looking for a 0.5% drop, and they actually got a 0.5% gain. So there was that surprising data they're referring to. As we move into today, we have initial. That's not till tomorrow, so it looks like we're pretty quiet today. Look at that, nothing on tap that we see here. So moving on to the euro, we're just in this very, very tight range. No changes, obviously. If you look here on the 2-hour chart, we're looking at 12.29 and 11.64. And the low yesterday was 11.66.5. So not bad. We're up by 2.5 pips here on this dip to the downside for support. We're talking about that as we came in. He mentioned, I believe, on the Face webinar too. So we come back up. So the upside resistance is 12.29, resistance 11.64. We'll actually move this up just a hair bit. Right there at 11.74. Thinking we should any dips and the dollar's begin to weaken a bit here. We had a resistance in the dollar index at 97.68. They did make it up as high as 74, but now we've dipped back as low as 42. So that was our resistance here. So let's go on and looking here at the euro. It's going to be 12.29, and we'll move this to 11.74, thinking they'll be buying it back on these dips. So it shouldn't see 64. Let's go and move into the cable. We'll continue to slide. God, it's amazing to think, just on Friday, this thing looked like it was going to Venus. And unbelievable. It really is unbelievable. So here we are continuing to slide back in here. Let's look at our bias chart support. 30.52. Oh, we've continued in. Actually, yesterday we had 30.52, and we got as low as what 30. It looks like 30.40 right here, right there. 30.40, yeah, 30.40 before rebounding to 30.80. But we since dipped back again. Let's go and take a look here on a fib to see if we can get anything there as far as a confluence. There is a little bit of support right there. You can see that. Just for a moment. We've already had a pretty good little fall here. I don't know how much you're going to be able to press it further. We do have that, they're thinking that they're going to go and try and push May further, so we could maybe trip it a little bit lower. But this is a good little level of support in here if you look across at that. You see there? We're going to just go move this down just a hair bit of 30.38. If we break lower, we break lower, but that's not a bad area of support right there, 30.38. Resistance. We're going to keep it pretty tight. We're going to go with 31 even right there, 31. I don't know why that thing won't allow me to change it. It's frustrating. So the Aussie dollar is still trying to go in and make a little bit of a recovery here, and we might be able to see some additional follow through. As the Kiwi has come back also. Um, Let's go and take a look where this might push us here. Oh, we'll go right there with 70.57. 70.57 right there. Give it a little bit of a room. I'm not saying it'll get there today, but I think we ought to have that right there as an area where it can get to. So 70.57 with downside support here at 16.9. We'll keep it pretty tight, 69.90, which isn't very far away at all. We already had it up there. We'll just move it up to 1 pip. And let's go and move into the Kiwi. We've got a hammer bottom here in the, at least forming right now, in the Kiwi after the RBNZ cut. So we had already, well, it looks like this market already discounted it quite a bit. I thought we were going to make it down here to the 65.17. They bounced a bit as it came down here, like right around 29. I guess maybe we made it down to 25. They bounced, and I thought, I'll pick it up if it tests this. I thought they were going to turn around and make one more dip below, and I thought we'll see what happens from there, but it didn't. It just kept moving higher and just kept recovering further. So it looks like we're forming a hammer bottom at this point. Support's going to come in right there at 65.67 for right now. 65.67. Resistance will come in right there at 66.15. We'll move into the Kiwi yen. Resistance comes in right there at 72, 77. And support right now is going to be right there at 72.44. We'll call it 72.43. Dollar CAD's still holding up here. But the key thing that we focused on in the Asian analysis to start the week is it still has not been able to grab a foothold of this 3504 level. And until then, and now with crude on the week, we'll give it to the dollar CAD in the sense that it was able to hold this while crude was strengthening. Now crude's weakening, but more importantly for me is that we just were not able to take out this 3504. And we even had a little gravestone doji here, and then we saw a pretty good dip. We come back up. This resistance is still in play, 34.74. So no changes there. 34.74 still holding. Support. Support right now is going to be there at 34.34. So about just a little over 20 pips lower for right now, 34.34. Now that's just initial support. Obviously, if the dollar is going to continue to weaken, we may be able to get that move down here to this key level, 34.15. And that's probably what you'd be aiming for if you took those shorts around 34.74. But if you're looking for, once again, we're just going to be finding some scalp support resistance. We're going to go with 34.34. Which should mean scalp supports. Let's go move into the peso. I think there's a lot better instruments to trade than this. The last time I said that the other day, I actually traded it. I think, by the time you put one on, whether you're long or short, you're thinking the market may go the other way because it's trading in such a tight range. Obviously, and one of the things that does surprise me is that we didn't move much higher on the risk aversion. So this one's just a tricky one as all get out. And I'm just going to stay here. If we marked it up, 1895. One is the bias chart support. Yeah, 95.3, keep that there. We had 1905. You would think that we'd move higher in light of risk aversion. Haven't so far. Um, but for now, it's just going to be 1910.2. 19, well, it could be 1910.3, just on the plain technical level. Moving into the dollar yen. A little bit of support coming right there, which is what, 988, and no, almost nicked it, 991. So let's just call it let's go with 978. Although we've come off so far, but if they take one more dip, there's even a case to be made right there, which was where they found support at 999, 97. Look, it's pretty well overdone. But let's just go with this 978. I think eventually we'll when we look at the daily, this is what we're looking at here. This 977. So this makes sense here. Just go with, as we came here. This was to start out the week. That was our support here. And we think we can break lower, and eventually we'll probably make it down to the pivot. But we'll go with this nine. Let's just go with just straight up 977. Take that dip here. Spook the market. We're gonna go right here with 1065, and that may seem like wildly way up in the stratosphere, but if for some reason we get some kind of good news or something, that's gonna be your initial line of resistance, true line of resistance. Yeah, there's some right here at 1036, but if we get some kind of good news or they go, oh, it looks like a deal, then that's gonna be your first line right there, 1065. And don't forget the market's extremely oversold right now. You could catch people, wrong-footed on this thing. So on the dollar index, no real changes. 97.68 right there. 97.24, no changes. I was on the Face webinar yesterday, filling in or doing some spot fill in for Blake, who's dealing with some internet issues. Um, and a request was made is, why don't I include crude in the buy chart, which we used to before. One of the reasons I dropped it also was to focus more on the cross rates. And another thing is also when we start to roll over, it goes from month to month on these contracts, and people say, I'd say, oh, we got it right here at 61.50, 61.50 support. What do you mean? The market's now at 61.36 or something, because then you get the situation where the contract rolls over. So here's the deal. I'll go and include this on the and we're just gonna just touch today because I haven't done any work here on crude. I mean, I just followed a little bit because of the Canadian dollar. But that being said, hang on. If you're comparing it to where you're at, it's going to be based on just the WTI here on TradingView. So if let's say you're trading July crude and July crude's trading at a 50-cent premium, okay, well then, compared to what we have here, then add 50 cents to the support and resistance. That's the way I'm going to go and do it. So it's going to be based on what here. I'm not following any contract month. I do have another software if I want to look at the real-time data on, let's say, right now we're dealing with what, June or July, whatever, but I just don't bother to trade. I've traded crude before. It's just like I said, the way I've seen crude is that to do very well at crude, I mean, unless you take a more macro look, or not a macro, but a little bit more medium term look, for me, I found I had to follow Rebob also. And but like I said, we'll see what's happening now here. Let's get a feel where we're at. The market's already come off quite a bit, rallied quite a bit. This is a great little gravestone dojo right here. And this is what crude will do. You'll follow this and you're thinking, okay, this is going to come off. Then it'll come back. And then, and it's not like as if these are 30-minute bars or 2-hour bars. So look, you drop back, then you're sitting there, sitting there, sitting there, sitting there, sitting there, and then finally it rolls back down. And there's a lot of ways to go and trade crude, and it's really a technical market. It really is a technical market. You try and trade another way, I think it trades very, very difficult too. But I think you really have to be focusing your energies on this market when you do trade it like that. But you can see it's stabbing all over the place. So it's not much of a intraday scalp if you're saying it's way up here and it's way down here. It doesn't offer very much value. And right now with this volatility right now, if we're going to hold here, Have to be right there at 61.12 if we're going to try and hold that. And right now the market's been breaking down. Let's go with 61.12. Pretty clear where the upside is if you go right here, which is 62 even. There's actually a level right in here if they were to break above that to propel them higher. This could be 61.88. We'll do some more work over the next few days to find out whether it's better to look at this on the 30-minute versus, let's say, a 2-hour. And maybe come into place here. If we're focusing on the intraday, we know the overall trend's lower, but as this market moves back and forth between the range, we're basically 50% back into this range. You see that? That's one of the things I like to do is look at a fib into a range. And so we're about 50 back right now in this range now. So good support right there. You see right there, 61.35. This is not bad right here. We make that dip down here to, as I said, 61.12. So we're holding it at this 1287, but the dollar has a potential to still weaken further. So we're going to move this resistance right up here to the 1293 level here on XAU, with support being here at the 1280. That 1287 has kept the market in check over the last couple of days. And let's go and move into the cross rates. Oh, rather smart rebound here in the euro pound. Just above the 50%. There's a resistance coming in right there. Actually, just a hair right there. That's 85.96. Oh, that's right where it went to. Well, we'll go with that. At least I know your risk levels there. Support's going to come in right here. I've already had a pretty good little move. Oh, doggone it. I have had a tough morning working with this program. One thing is not one thing, it's another. Support's going to come in right there. 85.54. And with the euro yen, well, you're even going beyond that. Obviously, with the strengthening of the yen, there's that potential to get there. 22. Right there, 22.68. As I said, the yen's already come off quite a bit, so we'll probably see a little bit of opportunity to even up a bit. We're going to go with this 23.21 for support right now. Eventually, I think we can get down to that 22.68, but for right now, we'll call it right there, 23.21. See if we can make this stand here. If not, it's going to open the door for 22.68. We'll go with this 23.21 for now. If we do get a rebound here, as we mentioned, just like with the dollar yen, has a chance to move much higher for starters, and that's going to be way up here at 23.82. On to the euro odd. This was a bit more trickier. I'm gonna give it some room to move up, but not much. I like that 59.79. It's gonna be right here. 59.80, 59.90. Let's call it 59.90. With support coming in pretty clear right here. there, 59.39. Euro Kiwi saw a pretty good move last night. I posted even that chart here. We made it. It gave a pretty good opportunity. Actually, have to go to a 5-minute chart to see it. If you look on here on the daily, we came up just a hair shy right here from this area, right there. You see here, and they came and took it out by just a few pips, but we quickly dropped off. So I posted this chart right there, and I myself took a short. I think it was right at 70. It got up, I think it's 70, 71 and a half or so. I was able to get off at 70, 70. I didn't take a whole lot. I only grabbed 18 pips because I was tired. And Blake had come in and he did some damage. And then he was calling night, and I said, I'll leave, but I'll tell you what, boy, probably would have been a good idea to let this run. But we had the presser was coming up, and I go, I'm not going to go on and just, just throw money away. But obviously, it continued to weaken here. Although we've already had a pretty good run, but that was laid out. I posted that right there, actually before we even got there, as it was going on the way up, and that was going to offer a good little opportunity there. And the risk was just, well, it depends on how much risk you want to go and take in, but we certainly have come off quite a bit. I wouldn't say that this would now be the risk, but this is where we came up with it. But if you go to the 5-minute chart, you can see how we came right back up, you see? And from there, it just kept on falling back. And then you can see when you look at the body touches, I always say how important those are. You see that? We couldn't get above the body touch on the rebound here. We've since drifted. Resistance now, let's move this into a 30-minute. God, I think they could take these out. Well, if you look at the rebound from here to the rebound, well, let's just call that. Let's go back to that 5-minute. Right there, 70.36. Supports the big level here, 69.48. And keep it real simple right here. Right there, 70.11 on the Aussie yen. $77.11 I meant to say. And resistance. Is going to be right there. We're going to have some resistance here, but once again, if they get some kind of a news thing or whatever, this is where the real resistance is going to take place. So you could end up seeing this market move higher, 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 and then push beyond it. That's where the real resistance will take place. So 77.90. Okay, no changes. Euro sterling. Sterling yen. Also pretty well overdone here. right there, 43.54. It's just this little high mark right there, 43.54. This one will lower it a bit here though. So it's going to be 44.48 for the resistance. Boy, this thing has given back a big chunk of change. We're right there to 38%, so we're going to go with that right there. Right there for support. 85.81. It's already gone just a bit below, but 85.81. Well, you know the importance of 86.12, but we'll give it some room. And we'll go with 86.53. Then on to the countdown. $81.70. With resistance, this doesn't even move that much quite often, so we'll go right there. Right here. 82.34. Okay, and there's the bias chart, and we're going to get that. We'll get that posted in the room. And thanks for joining us here on the European crossover.